Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, April 8th, 5:19 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a short-term pullback. Not all indexes, though. Some have recovered last week's harsh move down that happened on Thursday afternoon. Now looking more like it's going to be, well, looking for now like it was a one-day shakeout, but the market is coiling tightly and looking forward to reacting to economic data that's coming later this week. Wednesday, we've got CPI. We also have the Fed minutes Wednesday afternoon and PPI Thursday. No doubt those numbers and all economic numbers have been paid a lot of attention to lately, but the fact that the market has held up for 2 days now after that harsh move down, I think is a win for the bulls from the standpoint that there's been a lot of talk about uh, the number of rate cuts being reduced, possibly to zero, and the market's not falling apart on that possibility. We are seeing weakness in quite a few retail names, particularly higher end retail. And that's some cause for concern. That started with PBH, Phillips Van Heusen, uh, maker of Polo, Ralph Lauren, not Ralph Lauren, one of the other luxury shirt makers, uh, and apparel makers warning last week that followed up on Lulu's warning on their earnings report, and that sector kind of sold off hard, and it looks like they need to build bases now, but we'll get into that in a bit. See the trend gauge over here. We've got yellow neutral on market leadership. The leaders from the bull market that kicked off back in November have been taking a break, a bunch of them pulling down to the 50-day/10-week moving average now. They need to hold that area and build the right side of bases or bounce off of there convincingly in order to get leaders back from neutral to bullish. We do have the green sub arrow as some of the breakdowns from last week did recover key support levels. Short term, also with the yellow, neutral, green sub arrow, S&P and mid caps regained the 21-day moving average on Friday, got their second close back above it today. Small caps regaining the 21-day moving average today, and the NASDAQ 100 closing right on the 21-day moving average. So that leaves the Dow as the only index below the 21. It's sitting right on the 50-day moving average. We've got the green arrows there for our medium-term 50-day and long-term 200-day moving average trend. So what happened today? Tight range chop, some volatility intraday, but still a very tight range. Traded inside the entire afternoon range from Friday. Mid and small caps outperformed. Leaders were mixed. Here are the final numbers. The Big Seven composite down 0.43%. RG8s, our 8 growth ETF composite, up 0.53%. S&P 500 just closed below the flat line, down 0.04%. But there was some positive breadth. The RSP up 0.31%. That's the equal weight S&P. NASDAQ 100 just barely positive, equal weight up 0.12. Dow just barely negative, seeing a trend here. Basically a flatline day for these big indexes, depending on when the bell rang, whether they were positive or negative. Mid caps and small caps is where the strength was today. Mid caps up 0.43, Russell 2000 small caps up 0.5%, Global 60/40 up 0.09, in-house GROTECTION down 0.06%. Let's get into the charts. Then we'll hit the tail of the tape. We'll start off with the S&P 500. Let's bring up a 5-minute chart here, and you can see this was the big sell-off Thursday. Nice recovery Friday. A little bit of a pullback Friday afternoon, but a rally into the close. And you can see how today's range on the S&P was completely contained by the afternoon range from Friday. This 5220, you can see how it was a battleground area here on Wednesday. We sliced through it on Thursday, acted as resistance on the way back up on Friday, and it was resistance again today as well. So 5220 a short-term resistance level there, and you can see after the big shakeout, recovery on Friday, very tight range today, just below the 8-day moving average. This is a possibility. What happened last July into early August? We had a big negative reversal off the top, 2 tight days higher, a third day just barely down tight before folding below the 8-day moving average, and that kicked off a 3 waves down correction. If something similar happens, the first sign that we'll see is a break back below this 21-day moving average. So that's the key level to watch to the downside on the S&P 500, and that level is sitting at 5181 as of today's close. On to the NASDAQ 100. We've been saying for a while how relative strength topped in late January for the NASDAQ 100. Look at these tight closes for the last 5 days, right on the 21-day moving average. And that's basically flatlined as well. So coiling for a move there as well. Dow Jones Industrial Average, the weakest of the index, is sitting right on the 50-day moving average, relative strength, making a new low, while price is nowhere near recent lows. Mid caps, this is where we've seen some strength lately and strong today as well. Back above the 8-day moving average after bouncing at the 21. So some good stuff there. And small caps regaining the 21-day moving average today. Banks were strong. KRE, that primarily is what led small caps higher today. Let's go to the VIX. VIX was down quite a bit, especially in relation to the tight action on the indexes. So back below 16 on the VIX, which is what we want to see. The dollar, this move higher and then break below that rising bottoms trend line. We stay below there. That's going to be a benefit to stocks. We're sitting right on the 21-day moving average, where we tried to break to the upside of this range last week. That has failed, and we're back into this dollar, this kind of V-shaped base here now. That's a benefit. Pullback in the dollar, benefit to stocks. Normally benefit to precious metals, and gold made a higher high today. Very nice run. Silver continues to run higher as well. Gold stocks, however, with a higher high and then reversed, so not closing up, although the metals did. Bitcoin, IBIT. Bitcoin broke above a range over the weekend, held it overnight, and to the upside, you can see this triangle that I drew here, clear break above that declining tops trend line. So a nice breakout here. They're up 6.6% for IBIT. On to bonds. Tight action and mixed action on bonds today. Rates started out higher, pulled back as the day went along, and ended up being a tight range near the bottom of this current range. BND just barely negative today. TLT basically flat. The TYX 30-year up 0.5%. You can see how it gapped up and closed at the low of the day, but still above this 450 breakout level here on TYX. TNX also gapped up early, but pulled back and closed near the lows of the day. That's holding its breakout as well. That's the inter-asset correlation. Let's go to the tail of the tape. You can pause this. I'll hit the highlights. We are looking for a resolution to this tight trading range based on PPI and CPI is on Wednesday, not PPI. Based on CPI, the Fed minutes, and PPI. So looking at what'll happen with that data coming up midweek. Up one with a 1-day consolidation is the day count. 2 days right on the 8-day exponential moving average for the S&P 500. 2 closes back above the 21-day moving average. Not a whole lot of standouts in individual sectors today. KRE, the exception. Gold and silver strong, as well as financials, discretionary, utilities, and real estate. Bonds mixed to the downside. The dollar, oils, and GDX, so gold stocks. Two changes to the portfolio. We closed that hedge with the continued strength above the 21-day moving average on the S&P 500, and we added uranium to the portfolio. Nice pullback after recent strength, bouncing at the 21-day moving average. We'll look at that chart in a minute. Bottom line on the day, take range chop inside day, mid and small caps higher. We're coiling for a move after bulls have to be emboldened by the recovery from the harsh move down on Thursday, not giving that back up. I certainly, my expectation was for lower prices, and we're not getting that. And that's why really predictions are futile. The market's going to do what it's going to do, and it will try to fool the masses. No question about that. All right, let's look at a few charts now. We'll go through the portfolio. Let's start out with the ETFs that we own. VDE, this is an energy ETF, continues to be strong inside day today. A little bit of a pullback there. IBIT, we already showed. DFEN, we bought this on the Israel Iran tensions last week as it was at a low risk entry point. Had the geopolitical situation on top of that. Good low risk entry there, pulled back a bit today. We're still up slightly on this position. Uranium is what we added today after a sharp move up, regaining this 50 level. We've pulled back nicely, bounced at the 8-day exponential moving average. Right below that is the 50 and the 21-day moving average. So some good support there. And CCJ, the leading stock in the sector, bouncing at the 8-day moving average as well today. So decent low risk entry there for uranium. And Nugget is the other ETF that we own. We already showed GDX. I'll show Nugget pullback today at that 40 level. All right, individual names. The two biggest positions are NVIDIA, that reversed at the declining, and this has happened multiple times over the last 2 weeks. This 8-day moving average seems to be capping any attempts at moving higher, and it closed back below the 21 today. This looks like it might be setting up a bit of a base or sideways action at a minimum. No strength at all. MU initially had a very strong gap up this morning as they announced a price increase, but it gave it up as the day went along, was extended to the upside, and in this choppy sideways market, runaway to the upside is extraordinarily rare. And Micron was, unfortunately for us, as it's our second largest position in individual names anyway. Kava, tight consolidation right around the 21-day moving average. Uber, very weak early. Some buyers showed up toward the close or late afternoon before fading a bit under the 50-day moving average. We've been talking about how the relative strength has been weak on leading stocks, and this falls into that category. Lilly, nice tight sideways action above the 21-day moving average. FCX closed above the 50, right on the 50 level today, where it had been bouncing around. Extreme strength there. We may add back some that we sold when it was extended last week. We'll be watching that anyway. Last two small positions, Crowd, same situation, declining relative strength, hanging right around the 10-week, 50-day moving average. And Dell pulled back today. Some sort of lawsuit or something hit this stock today, but for the most part, a lot of the data center AI type names were weak today. Dell down 4.2%. Some other things that stood out: Coinbase, with Bitcoin strong, you could expect that was strong, and it was up 6.7% today. First Solar, from my scans over the weekend, this came to my attention, showing relative strength over the last couple of weeks and really nice earnings numbers. Here with a PE of only 23, that makes its PEG ratio very attractive, but broke above this 178 resistance from back in December and January, and volume patterns have been positive over the last couple of weeks. So that's made its way to the top of our watch list. APP continues to be one of the stocks that continues to make higher highs after its earnings gap up back in February. I mentioned some weakness in some of the other data center stocks. Here's SMCI. trapped between the 50-day and the declining 21-day moving average as that's tightening up and volume is drying up. VRT was very weak early, had a nice bounce at the 8-day exponential moving average, still closed down 1.4% today. And ALAB, a recent IPO, semiconductor, 6 straight tight days of trading here. Doesn't want to go down, volume drying up. You see, we've got an alert there above the high from last week. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, reach out. The email my partner, Dan Stewart, dan@revereasset.com. Dan was enjoying the totality of the eclipse today in Dallas, Texas. Pretty some very impressive photos being published out there. I didn't pay a whole lot of attention to it at all today, but I guess if you were in the middle of it and all of a sudden it got dark, it was a pretty cool thing. What else is a pretty cool thing? We think we're a pretty cool thing here at Revere Asset Management, the way we distinguish ourselves from other advisors who just put you in a pie chart, tell you to think long term, send you a desk calendar maybe and a pep talk if you get nervous. We really think that our approach to portfolio management is far superior to that. You get direct access to the portfolio manager, active risk management, technical analysis of the markets, a focus on leading stocks, avoid lagging sectors, no diversification here at Revere, nightly videos explaining exactly what we feel is happening with the market and the portfolio changes and quantified downside risk. You don't get any of those things from your traditional advisor. The sleep at night factor is what we are very proud to provide to our clients. Anybody can get you in. Who's going to get you out? That's William O'Neill. No reason to see your nest egg slapped down by the market, especially after racking up nice gains in this bull market that kicked off in the beginning of November. And with that, I'm going to wrap it. Finishing up the video for Monday, April 8th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.